All right, guys, so let's look at the new level trading system. Let's look at new level. Let's look at first off, let's take a look at what new level is as a system. Let me go into explanation as to how you trade the system, what we're looking for in terms of the signals, what we're looking for in terms of the setups, and why new level works so well. Then we'll take a look at some of the daily time frame setups that we look for, and then we'll look at some 1 hour entries. Okay. So first off, let's talk about what new level is. So the new level is a trend reversal momentum based swing trading system. Okay. The trading signals are taken from the daily time frame and at the end of each at the close of each trading day, I should say. So at the close of each trading day, you would just look at the daily candle to see how that candle closed. If the candle is giving you a potential trend reversal, we would also look at our indicators to see what's going on in terms of the momentum from the oscillators. We would look to see if, are we approaching a support level or resistance level. We would also take a look and see how our moving averages, are they tightening up? Are they beginning to spread out? Are they beginning to cross over? So a lot of things we would take a look at the end of each trading day to get an indication of what tomorrow may bring, or what the potential setups could be in the next few days, right? We always want to be out in front of our setups. We don't want to just look at a chart and make trading decisions. We want to expect our positions or our signals to come at a certain time. So we want to do our due diligence every single day when it comes to trading our charts to prepare for potential trades that may take place either the next day or later on that week. Okay. Now the entries, they are taken from the 1 hour and the 4 hour time frame, and that all depends on which one of those time frames gives you the best setup. It depends on the currency pair that you're currently trading. It depends on, what day of the week that you're trading on. So a lot of those things play into which time frame you actually take the trade on. And then since it is a swing trading system, we already know that the trades can last from a few days to a few weeks in this system. Okay. So that is the basics about the new level trading system. And here's what we're looking for on a daily time frame in terms of the signal. So we want trade to be trading in the overall dominant direction of the trend. The trend is often identified on either the weekly or the daily time frame, right? So this is the 200 period moving average, which normally tells you the long term or the overall trend direction of the market or the pair that you're trading. So what we like to see is prices to come back up into the levels, whether it be a support and resistance level, whether it be a moving average, just a reversal where we can see retracements, or we can see the institutional traders beginning to take profit. And then we look for the reversal back into the direction of the overall trend. Okay. And that can be identified by the candlestick formations. The reversals can be identified by the weakening of momentum that can be identified on the oscillator. So different things like that give us an indication of what's to take place in the market. And we look for these trend reversals, right? So that'll be a signal. Here's another signal. And here's another signal, what we're looking for in terms of a signal from the daily time frame. Keep in mind, guys, all of our signals for trades, not the trades itself, but the signals that tell us, hey, there may be a potential setup, is found on the daily time frame when you're trading the new level system in its purest form, right? So let's take a look at some of the actual trade entry setups. So if you're taking entries on the 4 hour time frame, then you're just looking for the pullback into structure, whether it be a support and resistance level or moving average, or whatever you consider your structure to be. And then you're just looking at the candlestick formations and momentum to be shifting in the direction that you're looking to trade in on the actual chart. So on the 4 hour time frame, here's what we're looking for: price to pull back, go down. Price to pull back, and then get back in line with the overall direction of the trend. Now, keep in mind that the moving averages and the trend can reverse it could be a lot of different trends on these lower time frames. So what I consider to be lower time frames are the 4-hour time frame and below. I know people consider the 4-hour to be a higher time frame, but it all depends on the strategy that you're trading. So you can have several different trends on these lower time frames, but remember, you want to take trades in the overall dominant direction of the trend that's been identified on either the daily or the weekly time frame. Okay, and here is what your entries look like on the 1-hour time frame. So basically, you're looking for the same thing: price to pull up, get you back in line with the overall direction of the dominant trend. Okay, alrighty. So now let's take a look at some of the indicators that are used to trade the new level strategy. First off, I like to use Heiken Ashi candles instead of traditional candlesticks. That's just a personal preference. You can use traditional candlesticks if you like. You can use bars if you like, as long as you know how to read them and you know what you're looking at on the chart. The reason why I use the Heiken Ashi candlesticks is because simply they show me, they just clean the chart up for me basically. They show me a clear picture of the direction of the overall trend, and I can easily identify the buyers and sellers into the market. So when the sellers come in, I see these red candles, these red momentum candles. When the buyers come in, I can easily identify these blue momentum candles, right? Okay, then I'm using the 36 period moving average, which serves to me as a dynamic trend line. Price has a tendency to come off, bounce right off these period moving averages, this 36 period moving average, and just push back off, push back off, push back off. I use the 200 period moving average. It tells me the dominant direction of the trend for that currency pair that I'm trading. Right? A lot of banks, a lot of institutional traders, a lot of retail traders use this 200 period moving average to show direction. Then my momentum oscillators. Now, pick and choose the momentum oscillator that works for you. Sometimes I use my FX overbought, oversold oscillator, which we know that oscillators really don't tell you overbought, oversold levels, because price can be in an overbought level and continue to go up. What they really measure is momentum in the market. And that's what you should basically use them for. It shows divergence as well as momentum in the market. So you can use a stochastic. These are my settings I use on my stoke. TDI, you can use that, CCI or MACD. Just as long as you understand and realize what the oscillator is showing you, you should really study your oscillator that you're going to be using. Use the one that you're comfortable with, but more importantly, understand what the oscillator is reading and how to read the oscillator. It's the main thing you want to do. So here are the indicators I use to trade new level. Now let's get into some of the new level signals on the daily time frame, and then we will look at some of the new level entries on the 1-hour time frame. All right, so now let's look at some of these daily time frame trade signals when trading the new level strategy. So the first signal we're going to take a look at is this signal right here. Okay, and now let's talk about what makes this a qualifying signal. Well, first off, if you look right here on the 200 period moving average, you see price is trading below this 200 period moving average. So whenever we have price trading either above or below the 200 period moving average, we trade in that direction. If price is trading below the 200 period moving average, we want to look for shorts, right? We want to look for sell trades. If price is trading above this 200 period moving average right here, then we want to look for buy trades. So since prices are trading below this, 200 period moving average, we already know that we want to look for a sell setup. Okay, so now what do we see? We see price coming back into the 200 period moving average, right? So we wouldn't take this buy signal right here, because that would be what we consider a counter trend trade, right? What we would like to wait for price to come up and then start giving us these sell signals or these sell candles right here in line with the overall direction of the major trend, which is shown by the 200 period moving average. So once price comes up and then begins to sell off right here, we know that we notice this right here as a trade signal, right? Trade signal. Now, also, we can identify a trade signal when we look down, when we get this signal. So keep in mind, we look for our signals at the close of each trading day, which simply means this signal right here has already taken place. This candle has already taken place. It is now closed. We cannot make any money from this candle, right? But we also do look at the candle as a signal that the next day should be going short, or may go short, or may sell off as well, right? So we go in and we mark this signal. We can also identify that this is a qualifying signal from momentum. Now we see right here, price is beginning to trade below the 50% level on my stochastic oscillator. And also, in addition to that, price has traded below the 80% level on my FX overbought oversold oscillator. So it's just showing momentum is starting to turn to the downside, which we already expect because we already are looking for sell trades because of the 200 period moving average. So that is one signal that you will be looking for. Here is another signal, and it's the same, pretty much the same qualifications. Price is trading below the 50 of the stochastic oscillator. If you look right here, price is broken below the 80% level of our overbought oversold oscillator. So that shows us momentum reversing. And then you have price coming up into the 36 period moving average right here. In addition to that, it's coming up into this resistance level right here. And then price just simply begins to sell off. So that is also a signal. If you look right here, this could also constitute as a qualifying signal. Same scenario. Price is beginning to reverse right here, highlighted with the momentum oscillators. Let's see if we can find a buy signal. Here we go, right here. Right here is a better buy signal right here. So price came down into the 36 period moving average. It's starting to buy to go back up, to reverse and go into this, starting to turn into the, you see the buyers started to step into the market and they're pushing price back up. It can also be highlighted from the momentum oscillator. Now price is trading above the 20% level. Same here on the stochastic oscillator. Price is trading above the 200 period moving average. So it's telling us everything that we need to know, that price wants to trend back to the upside. Okay, so those are the signals that we will be looking for on the daily time frame. And the next in the next section of this video, we're going to take a look at how we would enter these trades using the 1 hour time frame. All right, so now we're looking at the 1 hour time frame, and we're going to look at the same signals that we looked at on the daily time frame, but I have dropped down to the 1 hour time frame, and I have placed my line on the actual trading day. So this is the actual trading day right here, right? This is the day that gave us the signal. So this is the actual trading day. Okay, so we will place our entry at the close of the potential day. Remember, from line to line represents one day. If I move this line, you see another dotted line here, right? So this is where our potential entry would be at the close of this day right here, right? So the question is, where does your stop loss go? Well, your stop loss can go several places. This is whatever you're comfortable with. Your stop loss can go at the swing high of the previous day, which if you put it there, you would have got stopped out. But I like to place my stop loss at the swing high of the move, right? So where price begin to reverse is where I like to place my stop loss. Let me show you where. If I go back to the daily, right? If I go back to the daily time frame, you'll see what I mean. So if that's my potential entry right there, then my stop loss is going to be at the swing high, the highest point of the up move right there, so I can catch all of this. And the reason why I place my stop loss here, because until the price breaks this level right here, I'm still right on my analysis that price wants to trend. If price trades higher than the highest point, well, price is just telling me it wants to continue to go up, and that's an actual stop out, right? So back to the 1 hour. Okay, let's go back to our trade example, our entry example. Okay, so here's where I would place my stop at the swing of this move. I would adjust it right here. So I would have a stop loss of, this is going to be huge, but I would have a stop loss of roughly 150 pips 1-to-1, I would try to get it on the other end. So it took me to actually realize this profit. It took me about 1, 2, 3, 4 days. 4 days and I'm in 1-to-1 right there. And if I want to go for more, if I want to stack the position, which I often do, so I would have took that entry right here. I would have probably got another piece of it right here, entered again and entered again until I hit that original stop loss of 150 pips right there on the 4th day. All right, so let's look at another trade entry on the 1 hour. Let's go back to the daily. Let's find my other setup. If this line right here, get rid of that one as well as this one. All right, so this is the other setup that I'm looking at right now. So remember, this is the signal. This is what gave me, this is the actual trading day, right? And let me go in and mark in my stop loss so you guys can see what I mean at the swing high of that move. And since this candle gave me the signal, my potential entry would be at the close, the lowest low of that candle. So now let's look at it on the 1 hour. Let's find it on the 1 hour. Should be getting close to it now. All right, there it is. All right, so now first off, let's make some adjustments to the stop loss. Let's bring it in a little closer. Swing high that move. And this is our entry right here. And this is our trading day right here. So actually the entry would have been like a little bit further down because it would have been at the close of that candle right there. Here's a support level right here, guys. So I would have dropped my entry, had to break that support level. Right? That's why you make adjustments on the 1 hour. I want to enter after the support. I want price to put me in after I know price is going to break this support level. So that would give me a stop loss of 200 pips, 206. And it took me how many days? Let's call it 1, 2, 3, 4, 5 days to hit this take profit right here. This take profit, because that's 270 pips. You would have got it on this day, but got a little lower. Went down a little further, but you would have got it on the 5th day. But again, so I would have entered right here. I wouldn't have put a I wouldn't have took this right here because I would have been negative in the trade pullback right here. But I would have added position there, added a position there, and maybe added a position here. But let's just say I added 3 positions. That means I would have probably left with about 500-600 pips take profit in this pair right here. So let's look at the buy setup. Very easy strategy to trade, guys. Very easy strategy to trade. Alrighty. I'm sorry, this wouldn't have been a buy setup because the overall direction is still down. So we have to find another trade setup because we wouldn't have bought this pair because 200 period moving average was still trading down. That's the overall direction of the trend. So let me reset the chart. Let's find us a real buy setup. Okay. All right. So here's a real buy setup right here, where the price is trading above the 200 period moving average, right? Remember, it tells us which direction to trade in. So let's look at it. Let's look at this buy setup right here. So my entry would have been, my signal would have came after this close of this candle, but I wouldn't have been taking this trade here. I would have waited until I got like this candle right here, right? Or I would have waited for a pullback till I got like this candle right here, right? I need to see a big candle. Or I would have traded here, but I would have traded up to this level here. Or when this candle broke through, I would have traded up. So let's just say I took this trade right here, right? Stop could have been, my entry could have been here with a stop loss of about 148 pips behind the swing of this move, the swing low, or behind the 200 period moving average to make 148 pips the other way. So let's go ahead and put in these markers right here. Boom, entry somewhere around here. Let me move this over. Entry probably would have been a little higher. This is my trading day. Let's drop to the 1 hour. All right. Okay, so that's not going to work. Let's find it another way. Make this a little smaller. All right, so let's go out and find it. Remember, it takes us a little longer to find it on the 1 hour because what you see on one daily candle is actually 24 of these 1 hour candles. But we found it. There it is. All right, swing of the move. entry after that support level, after that resistance level. 126, 130 pips, 130 pips. Straight to the money. Took us, if all things played out like this, it would have took us, once we entered the trade, it took us like 1 day to hit the take profit. Trade was entered right here. Took us 1 day to go ahead and hit the take profit. Not a bad trade. So that shows you the new level entry, guys. I mean, you can adjust this right here. I mean, if you wanted to bring this up, this stop up to right here, trading below the 200, price doesn't generally fall below that 200 period moving average. Then you probably could have got it in. Same as 1 day, right? But just to show you guys, new level is a really good strategy to trade. You take the signals on the daily time frame. You don't get as many signals as you would get trading on lower time frames or taking signals from lower time frames, but you get you get better signals in my opinion. And then if you're trading a lot of pairs like I do, let me show you guys how many pairs I trade. Hey, you get enough signals. You get enough signals on these pairs, and I can trade a lot of pairs because I'm not looking for a particular I'm not looking to, it doesn't matter what pair, I'm just looking for a particular setup, and the charts all move the same. All right, so that's how you trade new level strategy, guys. Remember to like, share, and subscribe to the page if you like this strategy, or if you like you know, some of the things that I say on this channel. Really appreciate it. And yeah, that's how you trade new level. I'm out. Forex. Here we go.